This is Alan Farley from FX Empire. Dow component Caterpillar broke out above 2011 resistance around 117 at the end of 2017 and zoomed up to an all-time high around 173 at the start of 2018. The trade wars then kicked into gear and it put the stock in this corrective mode that shows these lower lows all the way into the pandemic low, which was about a 2 or 3 year low in March of 2018. Now, the stock's made a very strong recovery since that time, and it got upgraded on Friday and traded within about 3 to 5 points of this 2018 high. Now, that's a big deal because this is a cyclical stock, and the United States is still at the edge of a recession, and so is Europe, and so is Canada, and parts of South America. Of course, China is a big component of Caterpillar earnings, and so China is doing very well this year, and so that is underpinning the stock. Now, on-balance volume is underperforming price by a small margin here, except it could sort of pick up whatever it's missing if it comes up and starts testing this high. However, this level is a pretty big level because it goes all the way back to 2014, this OBV accumulation level. So when we get up here, you could assume that's going to be lots of resistance. Now, I think that's going to happen about the same time the stock gets up into this area or maybe sticks its nose up and shakes out a few breakout buyers. So I'm a little bit leery about buying the stock right here, especially because their earnings for this quarter are going to be less than 50% of what they earned in the same quarter last year. So they're really not earning that much money. So it's kind of a dangerous proposition to go and buy. But as we all know, there's an awful lot of capital sloshing around the American markets because of the trillions in stimulus that wound up in people's pockets earlier this year. So, I mean, the sky could be the limit, but I think you have to be careful on Caterpillar, especially because of its cyclical reputation.